Welcome to a new update. Today it is a big day because it's the event everyone is looking at, which is CPI. And the expectations were that CPI is most likely gonna come in higher than expected, but the opposite is true. We are seeing a number which is lower than expected, but inflation remains a little bit sticky, which means that we're still not at the 2% that the Fed wants to see, especially with core CPI. We are still at 4.7%, but in this update we are going to cover everything you need to know when it comes to CPI and the upcoming events, because there are a few more this week as we are finally getting some events and maybe some volatility, or maybe not, who knows. Before we continue, make sure to hit the like button, subscribe to this YouTube channel, also check out our premium and public Discord. In our premium Discord, we show you trade IDs and more, and we've granted ourselves with 130% a return for this year. You can join in the description beneath. And also today is another big day, which is we have partnered with a new exchange because unfortunately OKX is not eligible in the Netherlands, which means that I personally do like the exchange, but I'm not able to trade on OKX anymore, which means that I have to move towards another exchange, and that's when Bybit comes into play. So Bybit is you are able to trade on Bybit in the Netherlands, and therefore I've partnered with them, and you've got the chance to get some nice deposit bonuses, which means that between August the 10th and August the 31st, you get $20 for free if you deposit $100 and you join through my affiliate. You get $40 if you join and deposit $300, and you get the chance to win one of the 5 1-month memberships for MN Trading, where you can follow my portfolio and where you can start following and educating yourself with multiple trade IDs as well per month. So make sure to join Bybit through our affiliate link, and now we can start discussing the big events, which is CPI today. So what you can see on the screen here is core CPI and CPI, which is the big indicator for the markets, whether or not it's bullish or bearish, and whether or not the inflation will remain sticky or not. In this case, the CPI index came in at 3.2%, while the expectations were at 3.3%. The month-to-month data gave 0.2%, which was expected. And then we've got the core CPI, which came in at 4.7, while 4.8 expected. And also the core CPI month-to-month came in at 0.2. Towards this event, the expectations were a little bit skewed towards the upside, especially with the big drop that we've witnessed in July when it comes to this event, which was from 4 to 3. The expectations were that most likely we were going to come towards 3.5, but the measures are now that we are reaching 3.2, which is more positive than expected, but still we can conclude that the markets are providing a case where the inflation remains to be sticky. Then additionally, we've got another event today, which is the unemployment claims. The unemployment claims are rallying slightly, nothing to be feared, especially since it's still in the boundaries between 200 to 300k. But at least it starts to rally. The continuing jobless claims have been falling down again and got towards the lowest numbers, as you can see here, since March 23. So overall, the economy is strong, and especially CPI starts to fall off a cliff. So if we go back in history, we are getting into the stage that we are into the normal areas, right? So we need a few more months to get back towards the 2%, which means that the odds of having another hike is going to decrease. But it's a little bit conflicting, right? So CPI comes in at a lower grade, which is positive. Core CPI remains to be sticky as it comes in at 4.7. Unemployment claims still very strong, and as long as the labor markets are still very strong, the opportunity of the markets or of the Fed to continue hiking are there. So at this point, this is a number that we wanted to see. I think honestly, if we would have reached a number where we've hit 3.5%, for instance, that's probably going to give some serious input on the markets to fall. And the markets are currently looking at the case to drop. If you convert that towards Bitcoin, I think most of the participants are eager and are looking for a reason why Bitcoin must drop towards 15k, and it's quite similar to the stock markets. People must see the fact that the indices need to drop from the levels that they are right now towards a level that they need to get, which is lower, because we were assuming that we were going to get a recession or a depression, but as a matter of fact, we're currently rallying even more, and therefore it is not a really favorable rally at this point, and the same can be said about anything related to crypto. But in order to have some momentum on crypto, we need to see these data coming out. And when we're looking at the economic calendar, we've got some more coming up. Tomorrow is another big day, as there's European CPI data coming out and GDP data, but also PPI is going to come out, which last month, year on year, came out at 0.7%, and the core PPI came out at 2.3%. So we reached 2.3, 2.4 as a matter of fact, and the forecast is 2.3. If this one starts to drop back to 2% or even lower than the forecast, which seems very likely given that CPI comes in like it is right now, it is going to be an argument for the Fed to even stop hiking. I think it's very favorable to suspect that we are at the end of the hiking policy and might get a short squeeze in the bonds. The normal PPI data came in already lower than expected last time, in which we received 0.1%. I think CPI is lagging behind quite more often with this. And if we look at the projections, if PPI comes in at 0.3 or whatever again, it is going to be very positive for the markets. And I think you will see that we are going to have a fall on the yields. Right now, dollar is still consolidating. The question is, are we going to take out this high? As August and September are often a favorable period to sustain the risk-off mentality. We are going to see or anticipate whether or not that's going to be the case. Right now, we are making some sort of bounce. At least the trend is still down. The question is, are we taking out this low and continue to fall or not? If we are looking at the yields, we have seen a slight fall down, but no real move yet. We're still waiting for the actual move to occur. But if you look at the entire data here on a monthly as well, we are definitely at the end of the entire rally for the yields. And we are suspecting a reversal to be happening anytime soon. Whether or not the unemployment claims are going to come in a way that's unfavorable for the markets, and therefore the yields are going to fall. But at least we have seen a first big impulse move here, if you can see it from 1980s until now, through which it doesn't seem unlikely to have a case like this before we start to continue moving up again, as I think that the nature of having such a low yield is going to erase over time and is not very favorable to sustain here. What is gold doing at this point? Gold is just simply consolidating. We're getting into the area of longing gold at this point, which automatically also means that we're getting into a stage where longing Bitcoin is still favorable. We are still in the range, which means that this is the support zone. Here is the critical area to break through. Anything in between is super boring, but there are some big events that we're focused on right now, which is PPI comes out tomorrow. Additionally, we also got the ETF application coming out with news within the next few days. Whether or not the CPI is going to be important for the markets, the ETF actually is. If during this weekend there is going to be a data point or we're going to get an approval, make sure you're putting yourself into longs. And especially if you look at the correction of Bitcoin, which is still very shallow, the breakout are usually quite impulsive. But if it's going to be sustaining above 28k, we're all just fine. Now, after CPI, if you're looking into a strategy for the markets to take into, of course, range low is your entry point. If we get a clear breaker above 29.7 and start to continue moving from there, which means that a clear breakout takes place, not a wick, clear breakout, and then we reclaim the level. That's where you want to get yourself positioned. But at least with this data, I'm buying, and I hope you are too. Make sure to join through Bybit, and I'll see you again soon. Ciao.